Guys, Bitcoin just crashed to 87K and everybody is panicking. The fear index hit extreme levels. But while you were sleeping, well, three massive catalysts just converged that 99% of traders are completely missing. Now, two historic ETFs launched on Wall Street today, and institutions moved $40 billion in the political landscape just shifted. So both crypto and currency markets were affected by this, and I'm about to connect all of the dots and show you exactly how to position. So let's go. Three big things just happened simultaneously, creating opportunities all across all markets. So this morning, Grayscale launched both its Dogecoin ETF, ticker GDOG, and the XRP ETF ticker, which is GXRP. So on the New York Stock Exchange, now this is the first time two major altcoin ETFs have launched on the same day in history, right? So this is actually happening right now. So the big question is like, why does this really matter? Well, Wall Street can now buy XRP and Doge through regular brokerage accounts, just like buying Tesla or an Apple stock. No wallets, no exchanges, no friction. And the derivatives market saw this coming because Dogecoin derivatives volume jumped up 30% to $7.2 billion, and XRP surged 51% to around $12.74 billion. So leading right up to the launch. The second catalyst, while everyone's focused on the price dump, look at what institutions are actually doing. So the US Bitcoin ETFs are shattering records last week with $40.32 billion in cumulative trading volume. Now, BlackRock's iBid alone accounted for $27.979 billion, and that's nearly 70% of the total. So the Bitcoin record volume with BlackRock is actually dominating all across the space right now. So here's the big kicker now. The ETFs recorded 238.47 million in inflows on Friday, and Ethereum's ETFs broke their 10-day outflow streak with 55.71 million, and that's according to cryptonews.com. And the narrative is shifting right in front of us. The third catalyst, well, is the total crypto market cap just climbed back above $3 trillion today, which is up 1.4% from Crypto News. Now, but the fear and greed index sits at 12 out of 100, and that's an extreme fear territory. So CoinDesk, and well, historically, these are the best buying opportunities that we actually get. And here is the greed index right here. So we're in some extreme fear that's taking place. What about politics? Well, the Fed and the global markets. Well, let me show you the real forces controlling your portfolio. Now, that's not just technical analysis, it's politics and macroeconomics. And these forces affect everything: crypto, currencies, indices, the whole nine yards. So let's talk about Trump and the tariff effect. Now, remember October the 10th? Well, Trump threatened 100% tariffs on China. Well, that's the single announcement that triggered the largest crypto liquidation event in history. $18.28 billion in liquidations, and Bitcoin crashed 10%, and Ethereum tanked 14%. So why am I bringing this up? Well, because Trump continues to use tariff threats to renegotiate America's trade relationship with the rest of the world, and large market dumps like this are likely to continue. And if this doesn't just impact crypto, it impacts the USD strength, Euro USD pairs, risk assets across the board. So just think about it. Tariffs equal currency volatility, which equals trading opportunities. And when Trump announces tariffs, the USD typically strengthens short term as safe haven flows come in. Now, this weakens on also during the economic concerns, and we trade both sides of that move. And here's the flip side. There's talk of a Trump tariff dividend that could pay at least $2,000 to most Americans. And if that happens, we could see a massive liquidity injection similar to COVID stimulus. And we all remember what that did to Bitcoin and altcoins. Now, they went absolutely parabolic. So let's talk about the Federal Reserve factor as well. Now, this is critical. Fed December rate cuts add collapse to just 30%, down from 98% a month ago. Now, that's a huge shift in sentiment. Here's where it gets interesting. Just last week, confidence completely collapsed, with traders briefly pricing in the chance that the Fed might actually hold rates instead of cutting. Now, the odds have swung back toward a rate cut, and this flip flopping creates a massive volatility in crypto markets. The pairs, of course, like Euro and USD, British pounds in the dollar, and the DXY dollar index as well. So, why does that really matter for your portfolio? Well, lower interest rates make bonds less attractive, pushing capital into riskier assets like crypto. Plus, Fed Vice Chair Williams hinted at a possible rate cut, and Vice Chair Jefferson expressed optimism about the AI driven economic outlook. So lower rates typically mean a weaker US dollar, which means a stronger crypto and commodity currencies like Australian dollar, New Zealand dollar, and the Canadian dollar. Now, this is where cross market strategies actually are going to start shining. And here's the exciting part of that. While Bitcoin fell over 24% in November, the altcoin slash Bitcoin ratio increased by 9.5%. Now, what does that actually mean in English? Well, it means that altcoins are starting to outperform Bitcoin. XRP rose 3.7% and Ethereum climbed 0.79%, while Bitcoin was actually struggling to get it. Now, this textbook's altcoin season setup. Now, when Bitcoin consolidates, smart money rotates out of Bitcoin and into alts, and we're seeing that rotation happen right now. All right, enough theory. So here's my exact strategies across the crypto and currency markets. You can scale this with your own risk level. So let's start with crypto. For XRP, we're looking at a current price around $2.06. I'm splitting my entry into two zones. First entry zone is 195 to 205, and that's where we are right now. Now I'm deploying 40% of my position here. Second entry zone is 185 to 190. If we dip lower, that's where the remaining 60% goes. Stop loss is at the 175, which is below key support, and first take profit target is 240. Now that's a 16% gain, and I'm selling half of my position right there. Now the second target is 280, 35% gain, and with selling the rest. So position size should be 3 to 5% of your total portfolio. So why am I choosing XRP specifically? Well, because the existing XRP ETFs from Bitwise and Canary Capital drew $422 million in just the first 2 weeks, and now Grayscale and Franklin Templeton with ticker XRPZ are also launching XRP ETFs today. So multiple providers means sustained institutional demand, and that's the setup for Bitcoin. Now I'm using dollar cost averaging, so right now at 85 to 87K, I'm deploying 30% of my Bitcoin allocation. So if we dip into 82, 83K, I'm adding another 40%. Now, if we hit that 80K psychological support level, that's where the final 30% is going to go. Stop losses at 77,500, and well, that's below the major support. So targets are 95K for the first resistance, 105K for the major target, and for Ethereum, we just got a major signal, which is Ethereum's ETFs broke a 10-day outflow streak with 55% $7 million in inflows. Now that's a trend reversal signal, so I'm looking at entries between 2750 and 2850. So stop loss is going to be at 2650. First target is 3100 for a 10% gain. A second target 3400 for 20%, and the position size is 5 to 7% of the portfolio. As far as Forex goes, that strategy, well, this Fed uncertainty, the euro dollar is setting up pretty nice, and we're currently around 104.50. And here's the two scenario playbook. Scenario A, if we get a rate cut, I'm shorting US dollar. Entry 104.30 to 104.50, targeting 105.50 to 10600, and stop at the 103.80. The second scenario is if there's no cut, I'm going long on the US dollar. Entry 104.80 to 10500, targeting 103.50 to 10300, and stop at the 0530. Now we're waiting for Wednesday's PCE inflation data to confirm which direction we're headed, and that's going to be the trigger. For the British pound to the dollar, I'm playing the Trump tariff announcement. So when the Trump drops a tariff headline, we typically see an immediate US dollar strength spike. So I'm shorting the British pound dollar to the dollar right on the news for a quick scalp. Entry on the tariff headline, targeting 30 to 50 pips, stop at 25 pips, and we'll hold time 2 to 4 hours maximum. A quick in and quick out. So there's the cross market correlation play that took a lot of traders miss. And so when Bitcoin pumps, we go risk on, and the Australian US dollar and the New Zealand to the dollar tend to rise with it. And when Bitcoin dumps, we go risk off, and the Japanese yen strengthens. So US dollar Japanese yen falls, you can play this correlation. If Bitcoin breaks 95K resistance, now I'm going long Australian to the US dollar, targeting 65.50. And if Bitcoin breaks 80K support, I'm going long to the Japanese yen. That means shorting US dollar to the Japanese yen down to 148. So, talking about risk management all across these markets, maximum 2% risk per trade. That's non negotiable. So, for crypto, higher volatility means smaller position sizes. And for Forex, tighter stops and quicker exits. Now, keep 25 to 30% in stablecoins for cash or cash for flexibility, and never overlap correlated positions. So, if you're long Bitcoin and long Australian US dollar, you've got double risk on exposure, and that's pretty dangerous, right? So, here is what's critical for the week. Next week brings PPI inflation data on Tuesday, November 25th, and then the initial jobless claims and the crucial PCE inflation report on Wednesday, the 26th. Now, stock markets close Thursday for Thanksgiving, so these macro events move both crypto and the regular currencies. Now, you need to be positioned ahead of time. So here's a reality check. Markets are not collapsing. They're just consolidating under political and macroeconomic pressure. And that's the pressure creates the opportunity. Historic ETFs launched yesterday based on Yahoo Finance, and Bitcoin ETFs hit 40 billion in volume the last week, according to CoinDesk. Altcoins are outperforming Bitcoin BitGet. And of course, Fed volatility is creating Forex opportunities, and the Trump tariffs are shaking the currencies altogether. Now, these aren't problems, they're opportunities across multiple markets. So here's your action plan for the week, today and tomorrow. So watch these GDOG and GXRP ETF volumes closely and start positioning USD pairs. And tomorrow, Wednesday, PCE report is coming out. So this is a major market mover for both crypto and currencies. Friday, keep your eyes on any Trump tariff announcements plus those low volume opportunities while everyone is recovering from Thanksgiving. So if this video connected the dots for you on how Trump and the Fed and the ETFs are actually driving prices across the markets, hit the smash button and tell, well, the algorithm that you want more analysis instead of hype. So drop the comment below. And what are you trading right now? Crypto, Forex, both? I want to know. Now here is where it's going to get really good. So I don't just analyze markets, I trade them live with you. So every Monday, Wednesday, and Friday, we go live on trading crypto, currencies, indices, and whatever's moving. Real setups, real money, real results. We've already made $169,000 in profits trading together as a community. This isn't paper trading. This isn't back testing. This is real execution with full transparency. Tomorrow, Wednesday, we're trading with the PCE data reaction across crypto and Forex in real time. So you don't want to miss this one because PCE is one of the Fed's favorite inflation metrics. And Friday, we're hunting post-Thanksgiving multi-market opportunities. And next Monday, we're back analyzing the full week's market structure and setting up for December. We trade Bitcoin, altcoins, US dollar, whatever is presenting the best risk reward at that moment. So be sure to hit that subscribe button and turn on notifications because it's going to be one good trade after the other for the entire month. And the community is growing, the profiles are stacking, and there is a seat waiting for you. I will see you tomorrow. So stay sharp, stay disciplined, and let's go get it.